Stocks are down, Bitcoin is down, as well as YouTube video views for stock market content is going down as well. What gives? Most of you sitting there right now watching my channel are probably more growth-oriented investors investing in high growth stocks or penny stocks. And you've seen your portfolio drop more than 8 to 9% that the Nasdaq has dropped from its all-time highs. And you probably clicked on this video because you wanted to know how I felt as a YouTuber and giving you the honest truth. And after that, I'll give you some facts that help calm the emotions behind this whole roller coaster. So personally, when I go into my portfolios, which I'll log into my Wealthsimple Trade portfolio right now, we can see that over the past month, I'm down 11.49% or $4,779.35. And over the past week alone, I'm down 6.42% or $2,526.31. That hurts. And if you look at how much cash I have right now, it's only $267 to buy the dip. In my Quest portfolio, when I review the performance, it's actually down from all-time highs of around $360,000, and today it sits somewhere around $280,000 to $290,000. So basically, I've lost anywhere from $70,000 to $80,000 on paper over the last month. And what that can do to me psychologically, it just makes me feel like I don't really want to look at my stock market portfolio. It's a little bit hard to actually go in and buy stocks. And some days I look at my portfolio and think, why did I buy some of these stocks at such high prices when I could have got them a lot cheaper right now? But at the same time, are they going to go even lower? So maybe I should hold off on buying. So these are the honest thoughts that are going through my head. But despite seeing my portfolio go down by that much and actually feeling less motivated to make stock content and not even wanting to check my portfolio throughout the day, because that's how I honestly feel, I'm still going to be depositing $3,000 right now. The purpose of this deposit was to stay consistent, stick to a long-term strategy, and continue to deposit money into the account, even though I don't feel like investing because the portfolio is down significantly. Before I move on to the facts about the stock market, be sure to stay to the end of this video as I give a teaser about a stock that I'm buying right now. Now let's go over some of the facts that we can lay out and try to look at the stock market a little bit more rationally. Currently on the Nasdaq, it's been 37 days since the previous all-time high, and we dropped about 9.25% at its lows today. Moving back to the previous correction, we can see that it took about 90 days to return to previous all-time highs, and to hit the bottoms, it took about 16 days. Now 2020 was a little bit special, but let's go back to the March lows to see how long it took for it to crash. So from the all-time highs down to the very bottom, it took 28 days. And for the markets to recover, it took about 105 days or roughly 3 months. Now going even further back to the previous crash that we saw back in 2019, or we could call this a correction, it took about 84 days for the market to bottom out, and it dropped 23.50%. And for the market to recover to previous all-time highs, it took about 200 days, or basically 2/3 of the year or 8 months. Now looking at 2016, it took us about 42 days to reach the bottom of this correction, and for it to fully correct to previous all-time highs, it took about 212 days. So the market traded sideways for basically the same time as the previous one we just talked about, which is about 8 months or so. Now, if we bring us back to the market crash of 2008, which started in November 2007, it took us around 385 days. This is on a week scale. So this is almost just over a year, and it took the market about 1,162 days to reach previous all-time highs. So this is around 3 years for the market to recover. So investing should not be seen as a short-term thing, otherwise you stand to lose quite a bit. The second thing that we should note as investors is that the media has started to take more of a bearish or neutral stance on the stock market, versus a couple months ago they were still very, very bullish. So if we scroll through the front page of Yahoo Finance today, we can see a few articles here. Bitcoin could become outlawed by the way that gold was outlawed in 1934, speculates Ray Dalio. And there's another thing that's from Ray Dalio again. He says there's a bubble that's halfway to the magnitude of 1929 or 2000. So this is a fear piece that I see here. Bitcoin slips in another sign that retail trader mania is fading. So again, here's another negative narrative. Market wrap, Bitcoin slips to 52K, all eyes on Friday's $6 billion options expiry. Another article on Bitcoin will probably be outlawed by the US government. This is major fear in the Bitcoin market right now. So this is another mainstream media trick. I don't think this is the end of Bitcoin. Bitcoin could be the next domino to fall as investors rush to book profits, says technical analysts. So potentially there might be something linking the Bitcoin sell-off with the stock market sell-off as well. President Biden is considering major tax hikes. What would they mean for you? So it seems like there's a decent amount of negative narratives. Obviously, there's still positive ones because people need some sort of hope to hold on to. The third fact is that not all stocks are actually down. If we look over the past week or the past month, we still have sectors in the S&P 500 that are doing well, especially those in the recovery stocks. Looking at the NASDAQ charts, we can see that the 100-day moving average over the past year has been a level of support. And today, we touched the 100-day moving average for the second time in this correction. If we take a look at the fear and greed index, currently it's sitting at 41. So it makes sense that Main Street's narrative right now is fairly neutral or even bearish on the stock market. And you know the famous saying is that be fearful when others are greedy and be greedy when others are fearful. Right now, retail investors seem to be a little bit more quiet as there have been less views on stock market videos on YouTube. And this is probably because most retail investors have actually ran out of cash buying the first dip back in late February or early March. But after they bought the dip, it kept dipping until it hit the 100-day moving average. And as I said earlier, we've seen support there. The last fact that no one really talks about is just all the different market participants out there. When we're investors, we have to understand there's different types of investors in the market. There's people like momentum investors who tend to buy the stock market when it's going up or short the market when it's going down, and they play with momentum. There are other players out there who are day traders who tend to trade between 9 and 11 a.m. They try to buy all the little dips and sell at the peaks. And right now, because the market is very volatile and trading sideways to a certain degree, this is a swing trader's favorite market. And that's possibly why we're seeing a lot more volume right now as the stock market has dropped from its all-time highs. And the last market participant you should be aware of is smart money. And these are institutional buyers. These guys are probably buying in right now as the Main Street narrative has turned bearish. Smart money tends to buy when dumb money is selling, and this is probably where they're buying because they see some sort of level of support. After laying all these facts and thoughts about the stock market, here's my thoughts on what I plan to do in the market going forwards and what I have been doing. So over the past couple of weeks, I've been deploying cash, and in my Wealthsimple Trade account, I've actually been deploying more cash versus my Questrade account. I believe that there's no real rush right now to buy into the stock market, but rather it's a time to take a little breather, do some research, and find out the highest conviction plays that I have, and purchase those stocks when the market is putting them on sale. Typically, I look for levels like moving averages or support levels to dollar cost average into. One thing that I've picked up over years of investing is not to go all in right away. There should be a rough strategy deployed when you see a dip happening. Maybe when the broader market dips about 5%, that's where you deploy maybe a quarter of your cash. Then if it dips about 10%, you deploy another quarter. And then if it dips about maybe 15%, you deploy a third quarter. And when it dips 20%, maybe that's when you go all in. And if the market dips further beyond that, then I'll take every paycheck and invest as much as I can each week into the market in order to dollar cost average as the market continues to drop. At the end of the day, no one knows where the bottom is as much as they want to say they know, but everyone likes to always predict and sound smart if they're correct. I myself included in that. But after all this is said and done, the stock market is never going to fully crash and stay down there for years. At least the chances of that happening to me is like maybe 2 or 3%. It's happened before in certain countries like Japan, so if you really are worried about US or Canada having a recession for 30 or 40 years, then consider diversifying your portfolio into equities around the world. But if this current scenario plays out like 98% of the time where the market ends up recovering, then there really is no need to panic, because generally the stock market over the past 100 years has gone up. And here's an analogy that I'm going to leave off with you guys before we end this video. So the analogy of the stock market is like people walking a dog. As humans, we have a target and we know where we're going to go, so the path is very straight. However, the dogs sometimes go ahead of us or sometimes lag behind us. So just like the stock market and the economy has a general direction which is headed, which is typically upwards, meaning it's growing. Likewise, the stock market will run up like crazy sometimes and valuations won't match. Eventually, it'll cool down, drop back down below. Maybe we'll have a bit of a recession, but eventually, at the end of the day, the stock market roughly tracks how the economy is growing. So if you believe in the overall economy of America or Canada or whatever market you invest in, and you believe that there's only good things coming in the future in the next 10 to 20 years, there's nothing that you have to really fear about. So to recap, my plan right now is to dollar cost average slowly. I haven't been buying very often right now, but I've been buying, a couple times a week. And by the time this correction is over, I may or may not have deployed all my cash, depending on how quickly you recover. But based on previous market moves when we had 10% corrections, typically the market takes anywhere from 3 months to even a couple of years before recovering to previous all-time highs. I hope the content that I put on this channel is useful to you guys, as well as it continues to encourage you to invest in long-term wealth building stocks. Money isn't made overnight, but it's made over years of hard work and smart investing. Speaking of that, I've got a new stock that I've been buying in my Wealthsimple trade portfolio. Here's a screenshot of what it's been doing over the past couple of years and its current price today. Let me know if you can guess what this stock is. If you really can't wait for me to reveal, then you can check out my Patreon group down below where I disclose all my buys and sells in my Wealthsimple trade portfolio, as well as my Quest trade portfolio. To give you guys a bit of a teaser about that stock, the PE ratio of the stock currently is below a 3. They've been trading on the TSX since the early 2000s, and they have a market cap of only $30 million. This stock is a turnaround play, and it screams value to me right now. So that's all I have for you guys today. There's 2 videos on the screen right up here. If you're there, I'll see you there. If not, keep up the grind and have a great day.